You're listening to Property Investor Tales, stories from the front yard. Here's your host, Tabitha Bright.
Hello and welcome to Property Investor Tales, stories from the front yard, where I get to speak to property investors from around Australia about their investing journey. My name's Tabitha Bright and I'm the head of coaching at Positive Real Estate, where we help people build wealth through property. With over 8,000 clients across Australia and New Zealand, there are, of course, some incredible stories to tell, which hopefully make your investing journey that little bit easier and will inspire you along the way. So my guest today is Jared Redmond. Jared learned the power of starting early. He's injected a little bit of romance into the story, which we all like a little bit of romance, right? And investing successfully whilst juggling a young family. Enjoy this conversation with Jared. Jared Redmond, welcome to the podcast.
Thank you very much, Tabitha. How you going, buddy?
I'm good. So today we're going to chat a little bit about your journey with investing, which has certainly had its hoops to jump through. And I want to get to know a little bit about yourself and what's been going on, because from my research, when I did some homework on you, I found out that you'd been investing since you were 22. And tell me a little bit about that. Tell me what started your journey with investing.
To be honest, mum and dad, or dad in particular, was the property investor in the family. It was a house and land package up on the Gold Coast. And I just remember a bit of property being talked about in the family home through my teens in particular.
Oh, yep.
And, you know, when I was 21 years old, my father bought me a book, and I think it was Building Wealth Through Investment Property by Jan Summers. I read it, and he was on my back about getting a property, and thank goodness he was, because at the age of 22, I was able to save up a deposit. Back then it was 20 grand deposit.
Wow.
Yeah, and bought my first house out in Hoppers Crossing in Melbourne for 172 grand back then.
172 grand.
Yeah. First home buyer's grant back then as well, which was, I think it was close to 20 grand back then as well. So it was a good little deal to get into. And I was away really. I lived in it for 12 months and then tenants in it for many moons after that. So that's sort of where it started. That's the spark.
And when you say you moved out after 12 months, because a lot of first homeowners will do that, they'll take advantage of the grants and they'll move in for the requisite 12 months or so, and then turn it into an investment. You didn't continue investing at that point, did you? You had some oats to sow.
Yeah. Look, if I look back now, like we've all got regrets, haven't we? But if I look back now, if I'd only gone again and again, maybe in my mid to late 20s, even if they were local places here out at Werribee and Hoppers Crossing, I'd have a much different story to tell. But I had itchy feet, and one of the guys that moved in with me for that 12 months, I had a couple of mates move in. I'm not telling any stories about that 12 months of my life. At the age of 26, I packed up and went overseas for 12 months and just, university of life. And I met my wife.
Now, I saw something in your commentary when I was doing some homework on you, and you made a wee note that you met Gemma.
Yes.
And then there was the comment that Gem chased you back to Australia. So you met her in the UK and she chased you back.
Yeah, that's right. Hopefully Gemma doesn't watch this one in a hurry. But that's my side of the story. But yeah, we met, and we were only together for sort of 3-4 months over there, because I already had a use by date in the UK. I had a job waiting for me back here in the logistics industry. And it was a pretty good job too. So that was the call back home. That was about 13 months in, and Gem stayed there for about 6 months, and then she come and joined me over here in Oz, and we haven't looked back really. Started a family, etc.
And so with Gemma chasing you, I still haven't got the story on that. You need to extrapolate and tell me a little bit about that. So what happened?
Well, obviously there was a real connection between us, and as I said, it was only a couple of months worth. It was probably really bad timing in a way, but we wanted to explore more with each other, I suppose you'd say, and I sort of said to Gemma, if you're keen on Australia, what do you think about coming over and living over here for a while and seeing what happens, basically? So she, God bless her, she packed up and moved her world over here in 2007 or 2008. And she found a while to sort of put down roots and find a job, etc. But that's basically what's happened. And she's stayed here, I think it's 13 years now, 14 years.
And the rest is history. And there's 2 children and
a couple of kids running around, multiple mortgages, busy life. Lucky we're doing a call now and not half an hour ago, because the place was a little bit different 30 minutes ago when both kids were still here. But yeah,
I can imagine. Yep. And Gemma has also embraced the portfolio journey, hasn't she, with building your investments? Yeah. So you guys are on the same page, and I imagine that helps immeasurably.
Yeah. I think we're probably a classic busy household. Like, I'm 40 years old now, Gemma's 38, Flynn's 7 years old, Molly's 4 years old. So the last 5, 6, 7 years is where we've really turbocharged the portfolio with Powerede's help over the last 4 or 5 years being client. And we've done it with very young children and children entering the world. Like Molly, I remember we were doing a deal and Molly was coming into the world, and it was like helter skelter, but
I bet.
It can be done. But, like any good household, we have our sort of chores or responsibilities, and I'd probably look after the portfolio a bit more. But yeah, Gemma's 100% on board and understands there's lots of good going on, and that's the right thing to be doing for sure. So awesome.
Yep. And so, obviously for anyone that has a young family that is wanting to invest and hold down, is holding down a full-time job, often both parents holding down jobs, it does take a lot of organisation, and it sounds like you've got some really good systems in that area. And do you think that's the key to you guys being successful? Because how many properties have you got now? You got about, 4 or 5?
Yeah, we've got 5 investment properties, and then we basically own our own home outright, which is good and have done. And we've redrawn on that a couple of times, as you do, to go again through your investment journey. But we sort of have we call it our reconciliation night, if you like, or RECO night, once a month, where we'll get the spreadsheet out and balance the books from the previous month, money in, money out, once the kids have gone to bed one night. But yeah, there's a lot of sort of organizing that weekly schedule with the kids in particular, as you've touched on. So yeah, we're both on the same page, which is really good. So
that's awesome. And you guys have done an amazing job with your portfolio. And when you build a portfolio, often there's some interesting challenges along the way. Like, what would be one of the weirdest or craziest things that happen along the way for you with your portfolio?
We've had a couple of crazy ones. We've probably been lucky overall. I've got a good COVID story for you, but that's very recent. That's still unfolding, but it's just waiting for an insurance payout now. So you beauty.
Okay.
Always have good insurances, good landlord insurance. But a story from about probably 15 years ago. I was in my mid-20s, and it was the house in Hoppers Crossing that I first purchased. I remember it vaguely, but I remember the tenant going missing, and there was talk of where's the tenant, the rent's not paid, etc. And it was a little bit of time later that we actually found out that the police might have come and picked him up and taken him away. And nothing else was said. All I heard was that he had maybe gone to prison. So yeah, that was kind of a wacky one, because he was with us for a good few years and always paid on time. So I don't know exactly what happened, but that was pretty wacky. That was
So he just vanished, and you found out
vanished, basically. Yeah, and he was in prison basically. So I don't know much else. I don't know what he's up to now, but that was a bit wacky. But I was in Tasmania on a short holiday with the lads, going to watch a football match. And I remember getting a phone call saying the back fence, the property's on the back of a main road. And I remember the back fence getting blown over in the middle of winter, like completely sort of just toppled over. It must have just been ready to go. And obviously being on the back of a main road, it was quite a sensitive issue that needed work quickly. So that was a funny one to come home to as well.
It sounds like, in any portfolio journey, when you build property, there's always one or two, things that go awry.
Yeah,
And
yeah.
when we're coaching, we talk a lot about normal problems versus abnormal problems. And so there's certainly some fun stories, but good to know that over, if you're 40 now and you started investing at 22, that's
Yeah.
a decent amount of time in the market with a number of properties. And it's good to hear that, there's nothing that's gone too badly sideways for you, because a lot of
Yeah.
people are worried about that.
Yeah. Yep.
What would your thoughts be on for people that are concerned about the challenges of property? Would that stop you from getting into the market? Did it worry you? What would you say to somebody that's worried about the stuff that goes sideways?
Yeah, I suppose, especially in the last 4 or 5 years, being with Positive and being in the education program, I really feel like I'm a lot better equipped with all that stuff now. Like, honestly, 18, 19 years ago when what was it, 18 years ago, 19 years ago when I built that first property, I wouldn't have known what to do with half of this stuff. I would have been leaning on mum and dad in particular with some of his background with his Gold Coast investment. But yeah, I've learned all the risk mitigation side of it with having good buffers and good insurances in place, even to the extent of some good life insurance and stuff like that, all those things behind you. And as I touched on just before, with our Richmond investment last year with COVID, we got through about 8, 9, 10 months at a year without a scratch on any of the portfolio. But then we got a big scratch with the tenants basically vacating in Richmond and not paying rent for months on end. And as I said, we went through Terry Shear, and thanks to Natalie Flanagan, if she's listening, fantastic job with the R&W team. They really helped me through it. And we're basically getting all our money back through insurance, which is good. In lost rent, that is.
That's awesome. And so Natalie Flanagan and those guys, the R&W, they're your property managers, just for people that aren't familiar with the team. Yep. So the property management team made sure that you were kept abreast of everything, kept track of it. You've got your insurances, so your lost rent's going to be reimbursed to you.
Yep.
From your insurance.
Yep. Any day now that's due in. So it's taken a long time. It was a long, drawn out process. But yeah, the team at R&W were fantastic. Like, lots of communication with Nat, and lots of emails and all that, because one of the tenants had moved out, and the other one stayed in for a long time and eventually stopped paying himself. So it just got really messy, to be honest.
Right. And so, once again, for anyone listening that might be concerned, because often that's people's concern is if my tenants stop paying, and obviously there were some new rules that came in with COVID where you couldn't just kick a tenant out, and there were some drops in rent for people that would be a concern for a new investor. One of the key coaching tools for the coaches teaching people about investing is buffers. Is that so? Having a certain amount of money set aside for this kind of stuff, for emergency. Is that what you were able to draw on? So you had some buffers to manage the fact that your tenants weren't paying rent for a period of time. Is that what happened?
Yeah, that's exactly what happened, mate. Yeah, that got us out of drama. We didn't miss a repayment, etc. So we stayed in the lender's good books. It didn't. We got reasonably good cash flow, but those buffers definitely come into action because it was a good sort of 3 or 4 months there of heavily reduced rent or no rent. So it started to add up a bit, but having that good buffer in place got us through.
Great. And then good communication from the team and your insurances as your backup. And and you live to, pop out and fight another day.
I was really, look, it was good in a way. Like we experienced it, and all that stuff that Powery had been preaching with the buffers and good rental managers and stuff like that as well. It all come to the fore, so it was good.
Awesome. And so finally, here's a question just to wrap up that I ask everyone in a podcast. If you were standing in front of young Jared right now, so Jared 22 years ago, and I think I know what your answer is going to be, what advice would you give to young Jared looking back and knowing your journey now? Is there anything you'd do differently, anything you'd change? What would you say to young Jared?
Yeah, the real obvious one, I suppose, is just I would be investing a lot younger in life. If only I'd come across a positive, even in my early 30s, as opposed to, 4 and a bit years ago.
Yeah.
Get educated, go and join a program and submerge yourself in it and just learn everything. But yeah, definitely try and acquire some more assets early. If I look back now, I kick myself a little bit that in my 20s, I just, as I said earlier, didn't go again, maybe get that second or third one through my 20s. But definitely, and I try and tell that to people now, anyone that's sort of 18 plus, and you quite often don't have the conversations with people that young maybe, but if they do, I do mention it, because knowing what I know now, as you said.
Yeah, hindsight's a wonderful thing, eh?
It is, yeah, very much so. Yep, very much so.
Oh, well, thank you so much for chatting with me today.
No worries. Yep, no worries.
And we'll speak again soon. Thanks very much.
Thanks, Tab. Thanks for having us today.
Thank you.
Thank you. Cheers. See you soon.
Jared, I just realised there was one loop I forgot to close and one question I forgot to ask. And the property that you bought, your first property, for $172,000 in Hoppers Crossing, I believe it was.
That's the one.
What do you think that would be worth today?
I reckon it would be worth close to $600,000 right now.
Wow.
Conservatively, mid 500s, but we've renovated it since we've lived back in it and moved back in, and obviously raised the family in it. This is the kids' first home as well.
So you still have it?
Yes, I've still got it. It's still here. I'm in it right now. So,
that's awesome.
Yeah. So, and to be honest, it's probably been the backbone of the portfolio in a way, because buying it so early and getting rid of that debt on it, through my 20s and 30s, I've been able to leverage off it, haven't I? So, and now we're living in it. So it's been multi-purpose, which is fantastic.
Oh, that's amazing, Jared.
Yes.
I'm certainly glad I came back and asked that question. Yes, so the top tip really is get in as early as you can.
And just hold.
If you haven't got in early, you haven't necessarily missed the boat. However, if you are young and you do have time as part of your leverage for your portfolio, absolutely get in, because it just gives you that kickstart, doesn't it?
Just massive, to maybe then go and get those couple of cycles, 2 or 3 cycles by the time you're 40 something, or, incredible, very powerful. Yep, very grateful for it.
Awesome. Thank you, Jared.
Take care. Thanks.
Take care.
Cheers, mate.
Bye. Hey, thanks for listening to Property Investor Tales. Remember to subscribe so you get notified every time a new episode drops. As you can guess, I love hearing people's property investor tales. So if you'd like to share yours, then please get in touch with me via email at propertyinvestortales@positivementor.com.au. We would also love your feedback, and I would appreciate a 5-star review over on Apple Podcasts or Spotify. Remember, you can watch all of these podcasts over on YouTube at Positive Mentor or at positivementor.com.au. Until then, take care, happy investing, and bye for now.